Hi, this is Andy Hoffman, Marketing Director of Miles Franklin Precious Metals, in our 25th year in business. It's midday, Thursday, November 13th, and this week's audio blog is titled Revenge of the People. Now, with 7.2 billion people on the planet, the ability of its leaders to control them is rapidly weakening. Sure, the powers that be have sophisticated weapons, both financial and military. However, the fact remains that the world's population is rising by 73 million annually, a rate which will increase exponentially barring a major war or plague. Unrelenting growth and demand for scarce resources, including food, energy, and jobs, has caused the 1% making decisions to sacrifice the future in hopes of salvaging the present. And never before has this been more evident. It's bad enough trying to meet exponentially increasing demand in an environment of stable economic activity and sound money. However, when politicians distort economic law with unwieldy trade barriers, onerous tariffs, and suffocating taxation and regulation, the ability to conduct business is dramatically handicapped. Worse yet, when bankers are handed the keys to the printing press, as they are today in all 196 countries, the economic dislocation that results, as well as the geopolitical turmoil and social unrest, becomes insurmountable. The mad experiment of a global fiat currency regime that commenced in 1971 reached its peak in 2000, when the associated debt buildup officially turned from tailwind to headwind. And after just 8 years of desperate attempts to reverse the course of economic Mother Nature, the ill-begotten monetary system permanently broke in 2008. At that point, every incremental dollar, yen, euro, pound, and yuan printed, either independently or to parasitically peg one currency to another, had a 0% benefit on society and a 100% detriment. 6 years later, the entire world is mired in recession, with a veritable explosion of debt assuring this vicious spiral will accelerate until its inevitable cataclysmic end. This is why QE is spreading like Ebola, and why it can never end, as if it did, the aforementioned economic implosion would occur instantaneously. The U.S. Federal Reserve, aided by sister manipulation organizations like the President's Working Group on Financial Markets, the Exchange Stabilization Fund, and the Gold Cartel, let alone government data cookers like the BLS, BEA, and Census Bureau, Wall Street analysts, the mainstream media, the Financial Accounting Standards Board, and the 1% incentivized to maintain the status quo, spends every minute of every day planning and plotting how to paint a matrix of lies for public consumption. However, the 7.1 billion people that represent the 99% don't invest in or even watch financial markets anymore. And more importantly, no manner of market manipulation can alter the fact that citizens' ability to survive, without government entitlements funded by printed money, of course, is rapidly declining. This is why even mainstream media apologists like Yahoo Finance are publishing top stories claiming, for instance, that despite a much improved unemployment rate, living expenses continue to outpace earnings across the United States. Not to mention, even the fudge data has never been uglier, including the granddaddy of propaganda itself, the monthly NFP employment report. Or better put, the unemployment report, which is what it typically depicts month after month. Rarely in the headline jobs and unemployment rates numbers, but always in the horrific internals. To that end, last week's October report was a disappointment on both counts, badly missing estimates and revealing another month of jobs generated largely from the phantom birth-death model, and otherwise from the same part-time or temp, minimum wage paying, non-benefits entitled jobs that have characterized the U.S. labor market since 2008. Of the jobs that actually are created, essentially all are in the 55 plus age category, as senior citizens that can't afford retirement take the minimum wage jobs younger generations used to take. Of course, now that more than 50% of citizens are on the dole, with the remainder subsidized by subprime home, auto, and student loans, which ultimately will be paid back via inflation, the incentive to take such menial jobs has never been weaker. And sadly, even the world's best propaganda machine hasn't been able to produce any real good news, other than the island of lies diffusion indices that even Wall Street mocks. Worse yet, even such good news has been far less good lately. And as for the international markets, it's been non-existent. Especially now that the elections are over and lame duck Obama has no reason to unduly overstate economic data, the likelihood of the reality of an expanding recession becoming universally realized is extremely strong. This week alone, the terrible NFP report was supplemented by bearish Challenger layoff, weekly jobless claims, and JOLTS job hiring data, validating the ongoing weakness in retail sales, industrial production, factory orders, and durable goods orders. The third quarter has been one of the weakest earnings seasons in years, with more than half the S&P 500 reducing expectations, including bellwether companies in both need and want categories as diverse as Walmart, Coca-Cola, IBM, Cisco, Amazon.com, eBay, and Netflix. And worse yet, the surging dollar, not against real items of value, but other fiat trash, that is occurring due to fears of economic collapse, will only serve to damage America's competitive position and corporate earnings, further prompting an expansion of the final currency war we have long written of, which of course entails exponential increases in global money printing. But don't worry, the bankers are doing just fine, care of limitless ZERP and QE money, rigged markets, and their co-opting of essentially all aspects of government. And this despite historic fines for rigging markets of all types, from mortgages to foreign exchange, to what do you know, precious metals. Regarding said currency war, it is one of the 3 death trends I wrote of last week, connoting the fatal flaw of fiat monetary regimes. As we wrote last month, the unrelenting currency volatility, which for all intents and purposes means the collapse of any currency not privileged to have reserve status, is the single most precious metals bullish factor imaginable. And thus, as currencies the world round continue to implode, some like the yen at their own hand, the odds of catastrophic social unrest, military conflict, and secessions and/or expulsions increase exponentially. Throw in said third death trend, collapsing oil prices, and we have a deadly Molotov cocktail, as plunging oil prices will only accelerate the demise of the heavily depleting, overhyped, overleveraged U.S. shale oil industry, as well as most of the Middle East, given that even low-cost producers like Saudi Arabia require $90+ oil to fund their national spending budgets. Just wait until both segments start to overproduce, regardless of the propaganda OPEC spews, in a desperate market share war. The global ramifications will be catastrophic, with the negatives far outweighing the positive of slightly lower energy bills, many-fold. Regarding unrest, America's resounding denunciation of the ruling Democrats was just the beginning, as while highly symbolic of the nation's record-low presidential and congressional approval ratings, and this amidst the ballyhooed recovery and a multi-year low in the headline unemployment rate, it will have essentially zero impact on the nation's direction, let alone the 99%'s lives. However, September's Scottish referendum nearly broke London's back single-handedly, and last weekend's Catalanastrophe, as my subsequent article deemed it, will have far greater political, economic, and social ramifications. MSM propaganda spent weeks pretending the Catalonia vote was up in the air, but in the end, 81% of Catalonians favored secession, while just 4% were against it. The hopelessly corrupt, financially collapsing Madrid government managed to declare the vote unconstitutional just in time, but that won't stop the impetus this historic vote has created. Catalonia will eventually secede, and when it does, it will take 25% of Spain's tax revenues with it. To that end, however, as geopolitically and economically unsettling the Scotland, Catalonia, and eventually Venice, Italy votes will be, none have the potential impact, particularly on a short-term basis, of the November 30th Save Our Swiss Gold referendum. This is, for all intents and purposes, the equivalent of ending the Fed, as if the Swiss are wise enough to vote yes, the vile Swiss National Bank, for all intents and purposes, will be abolished. Sure, they'll still have meetings and pretend to be important, but in effect, they'll have no more ability to affect Switzerland than a neutered dog to reproduce. To that end, this month's paper gold and silver raids are unprecedented, as essentially the cartels sought to not only drive prices into the abyss, but not allow them to so much as budge higher. No doubt their fear of the Swiss vote is the primary impetus for such blatant attacks, but sadly not their only motive. Between convincing the world that the end of QE, or as I call it, the end of QE LOL, is bullish for the dollar, not to mention the commencement of ECB QE, the launch of Abenomics 2, and snowballing weakness in the supposedly saved pigs markets. The powers that be clearly have their hands full. Throw in plunging global economic data, rising unrest, an expanding Cold War, and accelerating global de-dollarization, much less exploding U.S. dollar debts and deficits, and you can see why my decade-old manipulation mantra of each day worse than the last has never been more necessary. Ironically, the cartel playbook of suppressing gold prices ahead of the Swiss referendum neglects the giant pink elephant in the room, i.e., the fact that the Swiss are just as focused on the plunging franc, given its peg to the plunging euro, as the nominal price of gold. After all, since the infamous date of September 6, 2011, when the Swiss National Bank pegged the franc to the euro, devaluing it by 7% instantaneously and forever ruining its reputation, the SNB's balance sheet has nearly tripled, while the euro has plunged 16%. Swiss market share hasn't benefited a whit, as its GDP has grown by an average of just 0.4% over this period in over the 12 quarters since, no better than Europe at large. Comically, the SNB purports the Swiss CPI to have actually fallen during this period, whilst earlier this year, the surging cost of living forced a referendum on whether Switzerland should accept the world's highest minimum wage of approximately $25 an hour. Fortunately for Switzerland, the people voted no on that one, and hopefully the world's savviest financial population will be wise enough to save Switzerland by ending the SNB's reign of terror, repurchasing its lost gold at historically undervalued levels, assuming such size can be found, and ending its suicidal reliance on the printing press. Last but not least, this month's paper raids, which even I am in awe of, are causing extreme strain on the global physical markets. To wit, demand was already at or near record levels for both gold and silver when the attacks started last month. Since then, everything from Chinese gold demand to U.S. silver demand has been off the charts, with the former being greater than the entire global production, and the latter causing the U.S. Mint to have record Silver Eagle sales in October, before shutting down on November 5th after selling half of October's levels in just 2.5 days. U.S. gold demand has also been well above average, and silver premiums and delivery times have expanded, not just in Silver Eagles, but maples, junk, and other categories. And most damning of all, both metals are more heavily backwardated than at any time in the past 15 years, as the inventory drain of the COMEX, the GLD, and the Shanghai Exchange accelerates. Thus, to those holding physical metal with no need to sell, we can only say one thing: relax. The powers that be cannot manufacture gold and silver, and the more they short paper metal or surreptitiously disorder their scant physical inventories, the more rapidly the end game of default will arrive. Cumulatively, it is difficult to conclude anything other than that something extremely economically, financially, and perhaps socially wicked this way comes. And when it does, the ensuing global stagflation and unrest will likely be unprecedented. Thus, we cannot be more vehement in our belief that this may be your last chance at financial survival. And for those taking the initiative to protect yourselves with physical precious metals, we hope you call Miles Franklin at 800-822-8080 and give us a chance to earn your business. And as always, I can be reached via email at ahoffman@milesfranklin.com. Thanks and have a great weekend.